Okay, welcome everyone to our NatWest 2020 U.S. Election Outlook. I'm John Briggs, Head of Strategy for the Americas. I'm joined by our co-head of FX Strategy, Brian Dangerfield. Our goal today is to set the table with some high-level views on the election. We discuss a lot of this and more in our flagship piece that was published just this last Wednesday. But more than anything, we want to raise a few areas where we think we are different than everyone else or outside of what is generally mostly a consensus call. One other item of note, as it's September 11th at 8:46, if this call is continuing, the time of the first strike on the North Tower, we will interrupt for a moment of silence and then continue into what I expect at that time will be our Q&A. But to set the table, moderator, if you could go to our first slide. Okay, so bluntly, we see Biden as having a 65% chance of winning the election right now. That's a bit higher than the betting markets, but not by a ton. Even so, we do think that there is a likely swing back towards Trump that is due. For up to now, the narrative has been mostly about Trump and his handling of the virus and other issues, while Biden has not been particularly in the limelight. Also, with Labor Day having passed, this tends to be the time when more scrutiny goes on to the campaigning itself. And with scrutiny on Biden rising, we think there's chances for him to make some mistakes. Also, Biden's post-summer or post-virus summer lead, which tended to have many polls, over a dozen polls having him of a 10-point lead or more, is probably just unsustainable. So we do think that the election is going to narrow coming forward, but if the election was today, we also think that the Democrats would narrowly take the Senate, even if it was just on a 50-50 tie, with Harris casting the tiebreaker as vice president. So when you look at the combination of those two, that is our highest probability outcome, though by a narrow margin, which is a Democratic sweep. The second highest is that of a Trump win, but with the House staying Democratic, which we see in just about every result. The third highest outcome is a Biden win, but with a GOP Senate. The point being that both of these lead to split government. Now that's critical here because with the Democratic sweep, the Democratic legislative agenda opens us up to the path to more fiscal spending, while the other two mean gridlock in Washington and only probably marginal changes to the fiscal outlook. So that's really critical when it comes to the monetary fiscal mix, because under one, you could have a lot of fiscal and then potentially less monetary down the road. Whereas for the gridlock scenario, we're going to see little getting done, much like the last couple years. And that probably leads to more reliance on the Fed and the monetary policy side, as we've seen in the last couple weeks. The one thing that doesn't depend on Congress, however, or at least to a much lesser degree, is the regulatory outlook and then the geopolitical or foreign policy outlook. We're going to get into that in a little bit more detail, but that depends really who is in the White House. But in the US, the administration can really set the tone for the regulatory agencies, especially in foreign policy, as we've certainly seen under Trump when it comes to trade, both not just with China, but also raising tensions with the EU, and has implications for a potential UK trade deal post-Brexit. If we could move to the next slide, please. So this is our conditional probability matrix. So we look at it this way because, the House, we just think is going to be a different animal. I mean, if it is really hard for us to see the House turning to the GOP after 2018, where we had a blue wave. So the Democrats are defending in some potentially tough historically Republican areas, but not enough seats are really up for grabs in our view to risk the House changing over to the Republican side. So it's really about the White House and the Senate. So with several key swing states also holding key Senate states, and with the polarization of politics that only increases the tendency to vote up and down the ticket, it's hard to see how the result of the presidency does not heavily influence the Senate. So as mentioned, we think that if you have a Biden win of 65%, that momentum probably gives you a 60% chance of the Senate going Democrat, but a 40% chance of it still being Republican, just because the Democrats do need to take back several seats. And again, this is from this perspective, there is a chance that we narrow. So, when you work out those probabilities, conditional probabilities, we see a 40% chance of a sweep. But then again, a Trump win almost certainly secures a Senate in the GOP. And the probability for that is around 30%, and then split government with Biden, 26%. It is very hard for us to see a Trump win that turns the Senate blue. It's very hard to see. So that is a very low probability in our mind. Next slide, please. So on this slide, we have our very basic summary of our base case market outcomes. In a Democratic sweep, we see larger fiscal deficits, steeper curve, and more spending. Look, Biden does plan on raising a lot of taxes. His current plan is about 3.5 trillion in higher taxes over 10 years. But on the spending side, which is going to be concentrated just over the next several years, he has a 2 trillion climate plan, 1.5 trillion healthcare plan. He supported state aid of 800 billion. And we expect there's going to be other initiatives, especially if he concentrates on fighting the coronavirus with some of the spending that he's outlined he's supported, I should say. There'll be other initiatives the Democrats are going to look to capitalize on, especially in what might be only 2 years worth of control of all houses of government. So on net, it'll be more spending and more concentrated in the near years, whereas the revenue raisers tend to take place over time. So this brings us up to the first area that we might be different from many others. And I'll admit, even at NatWest, there's some debate. So while we agree that the initial reaction for risk might be down, it's what happens over the medium term that could be different here. So yes, we're moving from an administration that will have regulatorily light and favor, corporate taxes and basically has just done everything possible to keep stocks higher, versus one that might view the equity market as a bastion of the wealthy and the corporates, and the stock market performance is just not important to them. However, once you're past that initial reaction, and it's uncertain if that's a day, a week, a month, but over time, the prospect of the fact is that this is the only path to large fiscal spending could actually be supportive of risk over time. So as I mentioned, this Democratic sweep, it's the clearest path to fiscal spending. It might be, obviously it'll heavily influence certain sectors outperforming or underperforming others, but on net, it's the way you get fiscal into 2021. That also, because of all that additional spending, would lead to steeper curves and weaker dollar. So the second outcome of a Biden win, but a GOP Senate, in our view, is probably the worst outcome for risk, because you get all the increased regulation that comes to the Democrats, but none of the spending, because the Republicans just won't push anything through. For split government under Trump, not much gets done, but you do retain a business-friendly environment with both. And while both of these mean less fiscal, they both also mean more Fed for longer on the other side, which likely means lower rates for longer. Lastly, we do mention to finish it out, of GOP sweep, which is very low odds. But under Trump, you will get a lot of fiscal spending, but then you're going to get the enshrinement of tax cuts that he's already done, and they're looking to add additional tax cuts. So that's probably the deficit blowout scenario. Next slide, please. So here's where I'll head into our first differing point. So while betting markets have Biden in the lead, that's what we see here. And then David, next slide. And on slide 6, the polls also have Biden in the lead. My point here is that I actually think consensus is not showing that 2/3 chance of a Biden win is priced in. Just about everybody I talk to talks about how wrong the pundits were and the strategists and the polls in 2016, and they were right. Many believe that the silent majority out there that remains for Trump continues to exist. Brian's going to discuss that next. But what's interesting is that it's not just market participants that seem to think that Trump has a really solid shot at this, and it's more of a 50-50 race. In a CNN poll recently where voters favored Biden 47-40, those same voters thought Trump would win 51-46. There was a YouGov poll, I think yesterday or the day before, had almost exactly the same results. My point here is that if consensus isn't for a Biden win right now, and consensus, maybe under the covers, is that it's actually a close race, there's still plenty of room for markets to price in election developments along the way in the next 2 months as investor focus becomes heightened on this. And there's certainly room for volatility on election day itself. For the second point where we're different, I'm actually going to hand it over to Brian, who's going to say why this is not going to be like 2016. Brian?
Great. Thanks very much, John. So if you can move to the next slide, please. So just to pick up where John left off, we think that looking back on 2016 might not be the right comparison when thinking about Trump versus Biden in 2020. And that's not only about Trump. I mean, a lot of the discussion of Trump being underestimated comes from this idea that Trump had a groundswell of support that was not, that was not well recorded in polls. And it's all a Trump story. The entire 2016 comeback story for Trump is all about Trump. But if you look back at 2016 versus today, what really stands out is that it's less about Trump and it's more about the opponent, Clinton versus Biden. So this chart on slide 7 kind of illustrates that point. The purple line is the Trump versus Clinton spread. So negative is Trump trailing versus Trump versus Biden in 2020, which is the red line. So one thing that stands out is that the red line is consistently lower. Essentially what that means is that through the entirety of this race, Biden's lead on national polling averages has been more consistent. It's also been larger. If you look where we are right now, which is the end of the red line, we're about at the same point. But over this time period during 2016, national polls had been swinging quite wildly. And in fact, Trump had held leads in national polling averages over Clinton at points in the election cycle up to this point. Not only has that not been the case in this cycle, but if you look all the way at the right-hand side to the end of the purple line, that's where we were on election day in 2016, with Clinton with a roughly 3-point lead in national polling averages. If you trace that back, you'll notice that Biden has yet to have a lead of lower than 4 percentage points on national polling averages over Trump. So the Trump versus Clinton race was more volatile. Trump had more opportunities to make a comeback. And on election day, he was improving into election day, but his overall stance was consistently more volatile in 2016 and more open to potential revision. And what's important to remember, if you can move to the next slide, please, is that this is not as much about Trump as it is about Clinton versus Biden. So if you look on the left-hand side, this is the same polling average, just broken out for only Trump versus only Clinton or Biden on the right-hand side. So amazingly, Trump is tracking essentially the same path that he tracked in 2016, where he bottomed out in the middle of the summer and rebounded into the election. This can absolutely continue. And if anything, Trump is actually slightly ahead of where he was at this time. So for Trump, that's definitely good news. But one of the problems is he's not facing Clinton. And on the right-hand side, it really stands out, is that Biden's support among voters in national polling has been generally stronger and much more consistent. Again, this is less about Trump and more about Biden. So if your view is that Trump can continue to close this gap and that his trajectory will look more like it will continue to look like how it did in 2016, that he'll continue to move higher, that's fine. But one of the problems is that Biden's polling is consistently stronger than Clinton's. And so in order to close that gap, I think two things need to happen. Trump needs to continue to improve his polling. His odds need to get better, whether that's an economy question, whether that's a law and order question, we'll see. But I think he also needs Biden to come under some pressure in order to make it more likely. If you can move to the next slide, please. So when you think about Biden versus Clinton, what is the main difference here? I would point to a couple big ones that we're really focused on. The first one is that we think Trump very strongly benefited from the dislike premium for Hillary Clinton compared to Biden. So if you look back at 2016, one exit poll, showed about 20% of voters felt that they disliked both Trump and Clinton. And on the left-hand side, it shows that those voters broke decidedly for Trump, 47 to 30% at least in this exit poll. This is something that I think makes some intuitive sense. We were coming off 8 years of Democratic government. People who have displeasure with both candidates might be more likely to go with an outsider candidate, someone pitching something different, someone pitching something new, someone pitching change. Obviously, Trump is that. Trump was a wild card in 2016, maybe more likely to pick up voters who were disgruntled with both candidates, and that's what 2016 shows. If you flash forward to now, you look at 2020, similar polling asking the same question among individuals who dislike both Biden and Trump. That's the pie chart on the right-hand side, which shows that this has flipped, that Biden winning 42% to 22% among that group. So this is an important change. I mean, it's not necessarily that it's going to end up being exactly this change, but what this is illustrative of is that Trump is no longer a change candidate, that he's no longer a wild card, unknown quantity, that Biden, I think, is far from a change candidate, but compared to Trump, he is change. And so individuals who are disgruntled with both seem to be breaking for Biden. There are other sort of troubling developments for Trump. If you look at national demographics, if you look at voters 65 and older, Biden's doing a bit better among that cohort than Clinton did in 2016. If you look at the military, Biden seems to be doing a bit better. But this is the one that to me really stands out, is that Clinton simply suffered from huge levels of disapproval for a candidate who was considered such a heavy favorite. Biden just doesn't have that same disapproval rating. And I think it's reflected in the polls that if this is going to be a referendum on Trump, then voting for Biden is not something that's turning a lot of people off. That voting for Biden is something that's seen as acceptable rather than I don't want to vote for Trump, but I don't want to vote for Clinton either. So maybe I'll just do a protest vote. Trump benefited from that so strongly in 2016. We don't think he benefits from it in 2020. And so this silent majority idea kind of breaks down if you think that individuals who are disgruntled with the way things are going are not going to go for Trump the way they did in 2016, which was a huge part of that idea. Can you move to the next slide, please? Of course, we've talked a lot about national polling. We know that national polling doesn't really matter in terms of how the US elects a president. It's all about states. Individual state polling matters more than national polls. But national polling can tell you about the overall trend, and the overall trend is still that Trump has is at a significant deficit in our view. This map shows sort of a consensus view. The gray states are the pure toss-ups at the moment. The light blue states, I would point your attention to Wisconsin and Pennsylvania, kind of towards the top of the map, the Midwest. Those states look like recent polling is showing they're moving more in Biden's direction. Same with Michigan. Those three states were states that Trump won, that really delivered him the presidency in 2016. So those are critical states that we're, of course, watching. Florida and Ohio look a little bit more like toss-ups in this cycle than they would have at the beginning of the year. Remember that in 2018, which was a Democratic sweep, groundswell type support year, Republicans won tough governor elections in both Florida and Ohio. So those states, Republicans did very well in a very difficult year. So coming into 2020, it was probably fair to think that those two states were likely to go to Trump. That might still be the case, but polling has moved away from them. And generally speaking, polls at the national level and the state level have been moving towards Biden. There's time for this to change. We know that different states sort of run on different issues, agriculture versus city policy versus law and order. These things will matter more for different types of voters. And so, there's plenty of time for this to change. But right now, how the map plays out, if it played out exactly like this, with Biden winning the states where the polls look like he has a bigger lead, Biden would only need to win one of these 5 states in order to take the presidency, whereas Trump would have to win them all. If you add in Pennsylvania for Trump, if you want to say Pennsylvania is a red instead of a blue, then you're talking about 4 of these versus all 5 of these that Trump would need to win. So the path to 270 votes in the Electoral College to win the presidency is a lot wider, it's a lot broader for Biden than it is for Trump. It looks like Trump's going to have to win this election by the skin of his teeth based on how the polling is unraveling. That's how he did it in 2016. His path to doing it in 2020 is pretty similar. It's a narrow path. It's not an unwalkable one, but it's a difficult one. Can you move to the next slide, please? Turning to the Senate, obviously the Senate is incredibly important for legislative control, for a lot of the market impact. We looked a lot at the Senate. Because of the legislative, because of the ability to pass legislation, you need the Senate majority to come through. At the beginning of the year, this was a very uphill climb for Democrats to have a shot at the Senate. The way polling has shifted has made the Senate something that the Democrats could realistically take. So the seats that are circled in yellow were the sort of traditional swing states that we were looking for among Senate elections at the beginning of the year. Arizona, Colorado, North Carolina, and Maine. 2 of those states are especially important. Arizona on the far left and North Carolina kind of sort of on the bottom right for those who might not be familiar with the US state map. Those 2 states are not only important for the Senate, they're also important swing states in the national election. So whoever does well in Arizona and North Carolina not only has a good chance at winning the presidency, But if their parties benefit from the candidate doing well, they could also take the Senate. So John mentioned this at the top, that if Trump has a much better than expected night, and that night is better than expected in Arizona and North Carolina in particular, he could take the Senate and take the presidency. So because there happen to be swing states that have important swing Senate elections, it makes it more likely that the winning party of the presidential election is able to take the Senate. So I mentioned the 4 yellow circled states were ones that we felt were going to be swing states for all of this year. Recent polling has suggested that a couple of Republican strongholds look like they might be in play for Democrats to pick up in the Senate, specifically Montana, Iowa, and Georgia. Georgia is another example of a state that's a critical swing state on a national level. There's actually 2 elections going on there for the Senate. There's a special election as well. So you're going to hear a lot about Georgia, North Carolina, and Arizona in the run-up to the election because those states are so critical. And so basically what this map is showing is that Democrats need to win a net of 4 seats to pick up the Senate. In order to do that, all of the states that are circled here are currently held by Republicans. So they're defending in all of these states. Democrats need to pick up 4 of these in order to win. We're assuming they lose Alabama, which is not circled on the map. They need to pick up 4, but now they have an opportunity to pick up 4 out of 7, as opposed to 4 out of 4, which was their position in the beginning of the year. So the path for Democrats to win the Senate has opened up, it has broadened, because Republicans are defending in territory they didn't expect to have to defend. If I'm a Republican going into a national election where Trump's on the ballot, I wouldn't want to be defending in Montana, which is a state that's probably going to go for Trump on a national level by 20 or 30 points. So the message here is that because the national trends are so favoring Democrats at the moment, that Democrats have a shot to win 4 of these 7. If the national trends move even slightly, then this map can completely change and Republicans can hold the Senate. That Democrats' margin for error is quite small, but the path to get the Senate has widened, especially if national polling is right, and that Democrats generally have a good night on November 3rd. Move to the next slide, please. Looking at the House, I won't spend too much time on this. There's anywhere between 25 and 40 seats that you could consider pure toss-up in the House. Every House seat is up for election every cycle, every 2 years. Democrats swept into power in 2018. They did that by winning in suburban America. So the ex-urban suburban communities outside of, call it New York City, outside of Atlanta, outside of Chicago, that kind of thing. These communities which traditionally have affluent Americans, younger Americans, college-educated Americans who had flipped more towards Democrats in the 2018 midterms. So Democrats are defending on these, in these districts which they hadn't normally won, but they were able to win in 2018. And so it's a difficult map from them just as a result of that. But right now, the way national polling is looking, it seems almost impossible for Democrats to lose the majority. In fact, based on this map alone, Republicans could sweep all of the gray pure toss-up districts and still lose and still not take the majority, just because they're so far behind. And the House tends to move very nicely with generic polling for Democrats versus Republicans, because the kind of swell you would need for Republicans to have a shot at the House is probably +7 or 8 for Republicans in national polling, when in reality they're closer to down 7 or 8. So even if you have an excellent night for Republicans, this is still going to be an uphill climb. It's going to be difficult for them to take back the House under any scenario. Move to the next slide, please. So now I want to touch a little bit on geopolitics. So John mentioned at the top, and it's worth repeating, geopolitics is a realm that the president has significant control over that does not require the legislature. So that's important because a Biden or Trump presidency, if there's a split government, we might have to handicap the possibility of fiscal spending, of tax changes, and anything that has to go through Congress. But foreign policy and trade policy are something that we know the executive has a lot of control over. We've seen it in action over the next 4 years, and we might see it in action over the coming 4 years. So the big one to start on first is China. We know Trump has been, Trump has pursued trade wars with China. The relationship between the US and China has deteriorated. our view here is that Biden isn't necessarily going to bring with us a reset of the U.S.-China relationship. U.S. voters right now are very negative on China. One poll from, I think, back in March from looking at coronavirus and views of China showed Americans' view of China the worst in 15 years. And if you look at Biden's proposals, it doesn't look that far off from Trump. Hold China to account for trade abuses, human rights abuses, intellectual property theft, and the like. Biden also brings a climate angle to sort of a potential fight with China, which is that he would want to impose a carbon quota or carbon tax on imports from countries who don't meet climate targets. And that seems like it's specifically angled at China. So it's not necessarily a better relationship with China, even if it's a more principled one and one that comes from multilateralism. So the big difference between Biden and Trump is unilateralism versus multilateralism. Trump is an America First president. He's tried to leverage U.S. economic and military power to try and win concessions from allies and adversaries alike. We think Biden returns in the direction of multilateralism, and that's particularly important for the EU. Under Trump, we know that he's called them worse than China in terms of trade and economic relations. He's threatened auto tariffs. That's something that's probably going to overhang the relationship if Trump wins. That's something that basically goes away overnight under Biden. And that the relationship goes away from one where we're economic adversaries, where Biden is trying to use the olive branch, if you will, to try and get the EU on America's side in terms of trying to bring, to adjust the economic relationship between the US and China, for example, bring a global coalition together. And maybe that means rejoining the TPP if we move ahead to the UK. Because obviously the big US-UK foreign policy interest at the moment is the possibility of a trade deal in the post-Brexit transition period environment. We know there's negotiations ongoing, but there's a sequencing issue where the US and the UK can't come up with a trade deal at the moment because the UK's relationship with the EU is still uncertain. If you think about one kind of niche example, food standards is something that the US really cares about. We want to send more produce and agricultural products over to the UK. They have food standards that Americans think are too strict, too restrictive on the US. But the UK can't agree with us on food standards until they get their food standard agreement straight with their relationship with the European Union. So that's just one example on a number of issues that the UK has to figure out their business with the EU, maybe that's an understatement, before they come up with a deal with the US. So the prospect of getting a full free trade agreement with the UK done before the election seems quite low, just based on the timing and the need to get something done with the EU. Maybe the fact that Boris Johnson set an October 15th deadline for negotiations with the EU, maybe that's something that changed the game, maybe it's not. That's beyond the purpose of this call. But when you look ahead, Biden probably means you have to restart the process to a certain degree. You're going to have a new US trade representative. That's a Senate-approved position. So it's possible that it's going to take time for that person to get in their seat. And so during that process, it might take longer to get something done. I think the Trump administration, if Trump wins, has a very strong incentive to try and get at least a skinny deal, a phase one style deal with the UK, sort of to highlight the special relationship and maybe to stick it to the EU a little bit. On CEMEA, the Russia relationship, let's call it hot and cold under Trump. I think that's likely to continue. Unabashed support for Israel in the Middle East, also a hallmark of the Trump policy. Under Biden, we think it's going to be, there's little choice but for relations to get icy between the two. The Democrats obviously think Russia has been involved in U.S. election manipulation. They believe the Trump campaign was open to it. I think Democrats up and down the House and Senate are going to basically demand that Biden hold them to account if he wins. And so I think you could see new sanctions if he wins, though those are probably going to be targeted, not necessarily something like shutting Russia off from the entire financial system, which is something that the Trump administration had reportedly considered at times. Finally, very quickly for Latin America, we think Mexico risk is a lot less in this election than it was 4 years ago. Obviously, 4 years ago, Trump was talking about, border wall, getting rid of NAFTA, completely pulling out of NAFTA. And so Mexico was a really clear place where if Trump won, you would see significant weakness, and that obviously came through at the time. Now it's a different story. Trump has, he's pulled Pentagon funding to build the wall. They have agreed USMCA. He's generally been positive on the changes that Mexico's made to their immigration policy. So the US-Mexico relationship, which was a clear FX trade on the back of a potential Trump win going into that election, doesn't feel like it's the same dynamic this time around. So I'll move to the next slide. I'll pass it back over to John here, and then maybe we'll open it up for questions.
Yeah, and as a reminder, if anybody wants to type in a question to the question and answer box on the bottom of the Zoom, that'll come through to us. Excuse me. So as you see on this slide, I'm going to sum us up by taking us back to the beginning. Election season is now in full gear. There's only a few events left to look at. But given our view on where consensus really is, it's probably closer to 50-50 that this is a close race. These events, while not numerous, do have the chance to potentially move markets. Now, do they move markets greatly? Probably not. We probably wait for election day, but I do think as we head past Labor Day, and as we head into particularly the first debate, which is September 26th, attention is going to turn to it, especially once you pass the Fed next week, and market movements can start to become more noticeable. So one final note that I wanted to raise, which we don't have a slide for, but there's been a lot of talk about a contested election or delayed results. I have to admit that we find that very unlikely. I know it's a good narrative. We hear about this every election since 2000s for various reasons, but sorry, my screen just switched. The probabilities for us are just too low. First, you have to have a very close election, which is certainly possible, but one that is so close that one state makes a difference. Right now, Trump, as Brian mentioned, would have to significantly outperform across many states to have this be the case. And then in that one state, you have to have a handful of counties where, counting delays make that state come into play. To put it this way, in Florida in 2000, the vote count that led to a recount was so close, it came down to 537 votes. That's a margin of error of 0.009%. That's not a probability level that I personally would rely on to make that a primary argument behind our outlook. Possible? Of course, especially nowadays in politics. But we just we don't see that as a primary path for which to worry about when it comes to the elections. And then second, related to this is the most common argument is that, well, this time's different because there's going to be a ton of mail-in ballots that need to be counted, and that could take a long time. A lot more mail-in ballots will tend to be Democrats, according to several recent analysis by the press. But as we discussed, there's essentially 7 key states: Pennsylvania, Michigan, Ohio, North Carolina, Georgia, Florida, and Arizona. 4 of those states actually begin counting mail-in votes early. Florida starts counting mail-in ballots 22 days ahead of the election. Arizona and North Carolina start 2 weeks ahead. So ironically, whereas mail-in ballots are cited frequently by others as a reason why the election might be delayed, you might actually have more knowledge about the election because of the high level of mail-in ballots that are counted early in 4 of the 7 key states than you would actually have less visibility. So, for several reasons, we just don't see that as a main issue. Of course, it needs to be a risk. We all need to consider it. But for us, we just don't feel it's enough of a primary risk or enough of a probability to really work it heavily into our potential market outcomes. So with that, I think I will turn it over to Q&A. One last reminder, you can type that into your Q&A box, which I'm trying to maximize here. I do have 2 questions. First is a simple one. How do we get a copy of the slide deck? Well, just email your sales representative and we will make sure they get it over. Second question, I'm going to ask Brian, what are the chances of a Treasury Secretary becoming Warren under a Biden administration?
So we think Warren becoming Treasury Secretary, the odds of that are actually quite low. And the reason is not because of some sort of policy difference, but because of the likely results in the Senate. So we think the Senate's going to be quite close. We talked about how there's a path for Democrats to win the Senate, but it's probably a narrow one. Even if they win, even if they sweep into power and win 4 or 5 seats, that probably means, because the Republicans control the Senate 53 to 47 at the moment, that they're probably going to have a very small majority. And so their legislative agenda really depends on the Senate being held by Democrats. So the problem with making Elizabeth Warren into Treasury Secretary, if you're Biden, is that you take a sitting senator and move them out of the Senate. And in the state of Massachusetts, when a senator leaves, the governor gets to choose an interim senator for that seat, and the governor in Massachusetts is a Republican. And so that seat probably goes to a Republican in an interim basis ahead of a special election. So taking Warren and taking her out of the Senate might actually risk a Senate majority, under if they were to sweep into power. Maybe that calculation changes if the Democrats win the presidency, but they don't take the Senate. Maybe it's a little bit easier to say, okay, we'll lose another seat in the Senate because we don't need it, because we don't have a majority. So maybe that changes. But the control of the Senate is so important from a legislative perspective that it's a big risk to lose a Senate seat to a likely Republican appointee in order to put someone into Treasury, when you could just put a different Democrat in. You could put a progressive Democrat in, or you could put basically any Democrat into that seat and not have to worry about, why pick one of the 49, 50, 51 that you absolutely need for your agenda when you can pick pretty much anybody else. So we think the odds of it are actually quite low.
Okay. Well, that's all I see for questions. So in closing, I want to thank everybody for joining us. And just be on the lookout, because Brian and I are going to be doing a series of podcasts examining like specific issues in a quick hitting fashion. And as noted, a couple days ago, we published a flagship piece that goes through a lot of the policy implications, market implications, everything in much greater depth. So please let us know if you need that or look forward to reading it. So thank you everybody for joining us, and have a good Friday.